welcome back to See You Today. Still with me in Ramarpong, and we are now joined with the market analyst from Securitas, Daniel Wiguna. Hey, welcome, man. Thank you for
Hi.
being on the show.
Yeah, I'm really happy to be here also.
Yeah.
We usually do like market analyst also, weekly market recap also, but online. This is my first time doing like
on the TV?
offline market recap.
Well, welcome, and thank you for being on the show, man.
Yeah,
I mean,
sure.
so many things going on this week. The Saudi Arabia cut off the oil supplies and trying to raise. Now we're entering April.
Yes.
And then,
and this is the second quarter, right?
And we're entering second quarter, so we're seeing the numbers from Q1 now. So what do you have from Q1? So like what were we starting to see?
There's a lot of things that happening on our first quarter. The first thing that we want to talk about is all about recession. But we also believe that in the middle of that recession word, there is peace. We say P is for profit.
Oh,
so
that's good.
We call it reception, not recession. So this is what we want to tell to people, because the data, at the end of the day, the data shows that we are one of the country that really resilient to recession.
Oh, okay.
But let us see through graphics, shall we? Because on the fourth quarter last year, we see that there is an inverted yield curve where people like really afraid to do like risky investment, such as on the stocks market, because they look at the U.S. 10 years and 2 years
Treasury.
Yeah, Treasury, and it shows that there is an inverted where people like try to sell their 2 years Treasury, and then they start to buy a lot of 10 years Treasury. So when they see this inverted yield curve, it shows that there will be some risk in short term, but we don't know what kind of event that will happen.
Oh, okay. I'm sorry. So I just want to make sure I'm clear here. So entering 2023, people are unloading their 2 years Treasury, and they start buying the 10 years Treasury
because they see like
the recession is coming, or
maybe this is the sign of recession, right?
Right.
Yeah. Maybe we can see on the next data, but on the other hand, we are slightly better than other countries around the world. We can see our data on the emerging economies, which shows that on 2023, this year, we are slightly better than any country. You can see on the world output on the left side, and on the middle side is advanced economies, but we are slightly better on 2023. We are 3.7 average.
So it looks like we're gonna be doing as well as we did a year before, which is in the 2022 for the 2023.
Yes. Well, this is the data that we already gathered on 2023, which shows that we are really resilient to recession. But in the middle of our first quarter, voila, there like a negative sentiment, global sentiment, which is the Silicon Valley Bank, which people like non-expected that would be happen. So that would be the credit event that is we are really afraid of happening in this 2023, because most analysts and economists said that this is not the end. This is just the beginning. Maybe we can see this kind of event in the second half, but we don't know which bank would like have this kind of event. For Silicon Valley Bank, they're really lucky because they got like bailed out.
They don't want to say the word bailed out, but that's pretty much what happened.
Because a lot of business would collapse if the bank is collapsing. So because they hold a lot of like bonds and treasury, and a lot of things that can make like a snowball effect to the business. So long story short, they got bailed out, and then we look at the numbers here. The GDP growth on the Asian 5, which including our country, is also slightly better than any country around the world, including China, which in China 2023, they forecast that their GDP growth would be like 4.4%. This is all because of the reopening economy. So What I'm trying to say is there is a credit event globally, but it wouldn't like influence our country like that much.
Okay.
And even though China do their reopening economy, our GDP growth is slightly better than them. So we are like, as we can say on the first quarter, yeah, we are like super resilient.
Wow, that's good news, because like I know like as the ASEAN presidency this year, Indonesia,
Yes.
and the President Joko Widodo said that ASEAN has to be the epicenter of growth. So it looks like from the numbers, it looks like
We
we're
can
doing
tell
well.
from
I
numbers,
didn't even realize we're doing better than China
Sure.
at this point.
And also, even though the IMF have to recalculate our GDP growth,
Oh, you did?
yeah, we still are better because we still are better than other countries. So,
Yes.
what I'm trying to say is, how many percent of risk that our country can get for recession? After we calculate and then we look at the data, these show even more like better numbers. Maybe we can see it through our next data, because it shows that we only have 3% risk of having recession this year. Well, India have 0%. We know that they have like a strong domestic market on commodities trade.
Right.
We are also strong at that part. That's why our risk of having recession this year only up by 3%. As we can see, the Sri Lanka, European Union, and the United States have like bigger risk to have recession this year. Well, this is the credit event that we still don't know what will happen on their country next.
Right.
Yeah, because we see also on global market on the second quarter, there will be like a tight liquidity also in European Union and the United States. They keep printing bills and they keep raising rates. These things makes the investor like not trusting their currency. Because they keep printing bills. Right. So, and this explains how the gold price raising up like, these past few weeks, and then it passed around like $2,000 per troy ounce.
Oh, wow.
Yeah, so this is the Fed fund rate projection that I mentioned before, where we project that even though the Fed will keep raising their rates, it will end in 5.25%.
Why is that? Like, do they just have to stop it?
Because if they keep raising rates, well, their risk for recession will getting bigger.
Okay.
Yeah, because even though they raising rates until this level, their inflation level is not like, it's still wild, we call it. Because like they keep printing bills also at the end of the day. So that's why if they're not like cutting rates,
then the inflation is going to go up. But now, what I'm seeing right now, this is very optimistic.
Yes.
It looks like by July you're going to see like they're going to start lowering the rates.
Yes.
Is that really
they're going. We project that they're going to cut rates because they cannot handle it anymore.
Okay.
As you can see, also the translation to our country, which even though their rates is raising up, our currency, our rupiah currency is still strong. It means there is some optimism in our domestic market, which investors think that it's okay if the US market want to raise up rates. We don't want to move our money there. We will stay in Indonesia. Yeah, for investment.
If they don't have the money here, bring it in.
And maybe this would be like the right sign for like big investors or the big money or the smart money to come to our country, because our currency is like stable on 14,965 on our spot rate. It means if we have like that stable currency level, this will bring up a lot of big investors to come in because it's more stable, not because it's cheaper, but it's more stable.
So the point being is like we want the number to stay stable instead of like lower or higher. We just want to if it's possible for longer terms, we want to see it in the numbers.
Right. Nowadays, big investor seek more to like stable currency because it lowered down their uncertainty level.
Yes.
Yeah, and this like data is one of the reason why they want to take their big money to our country, because the debt to GDP ratio in our country is slightly lower than a lot of countries around the world, such as Japan, the UK, US. This is the big economy country, right? The Germany, the China, Italy. Our debt to GDP ratio in Indonesia is like 38 to 40%, which in other countries, in Japan, is more than 200%.
Yes.
In UK, almost 100%. In US, like 120%, and so on and so on. And this is the reason why they will, in the second quarter or in the second half, maybe we can see a lot of capital inflow, both in our bond market and our capital market.
Oh.
Yeah, because we have like stronger currency, more stable currency, and this would be the reason to do a lot of investment in our country.
Right.
And other things that can be involved while the capital is going into our country is our GDP projection in 2023, including next year. We project that our GDP will be stable around 5 to 5.1%.
Okay.
Because of that reason, because of our current account level is surplus, where we can see this is like super anomaly, as we can say it, because like 5 years ago we see like our country is still on current account deficit situation.
Oh,
but
okay.
After pandemic we got like the commodity boom momentum. Our current account is going on surplus more than 1 year, so this is like super anomaly.
When you say commodities, are we only talking about coal, or are we talking about every?
This is the funny part. The commodities that push our current account surplus is not only coal. It is CPO, as we can see, and iron and steel. And steel.
Are we going to see nickel anytime soon?
I don't think so, but it's still profitable. It's still profitable, and it still have like a high margin to growth.
Yeah. Okay. Do we have the graphic for the coal?
Yeah, sure. We have the graphic. Maybe we can see on other data, because this is super interesting. I say a lot of super things today. Because this is like some optimism that we hold from last year until today, and it's happening. Yeah, so we hope that on our second quarter and second half in 2023, we're going to see this projection came through. Well, this is the data. Right. Coal in 2021 is selling around $26.53 million, and in 2022 it raised up almost 100%. And palm oil also still on their 27 million selling level, and then iron and steel. This is like one of the commodities that we not expect to help a lot, but it does.
Oh, that's good.
Yeah. So 20.9 million on 2021, and 2022 is 27 point.
I'm sorry, I have to ask about the iron and steel, because the number is just surprising. 2019 we only have 7.39, and then we shoot up in 2021 to 20.
Maybe you ever heard last year about there is like a short demand. A short supply
right.
for container.
Yes. Because everybody was shutting down due to the pandemic, and like everybody's not doing it.
And then other countries try to find steel from our country, and that's what happened.
And then it shoot up. All right. Now, do we have any more data that would you like to share with us today?
Well, this is almost all of the data. Maybe we can. I think this is almost everything that can tell why our country in the second quarter we project that a lot of inflow will come, and then our capital market will also grow, because we see that our current account surplus will keep going on. We are in like strong economy momentum, But the thing that we are waiting for is the big money to came in.
Okay, in
the
Q2.
big money, yes.
Are we expecting this on the Q2s to happen,
yes,
or are we after it?
maybe it can be reflect on our capital market.
Okay.
Yeah, because our capital market now is on their 6,000 and around 6,700, 6,800 level. We expect in the first quarter it can shoot up to 7,100, but it didn't happen. Okay. The momentum that like kind of blocking it is the reopening economy in China. Yeah, when China reopened their economy, most of the big money, well, we can say like park their capital there because they have like higher bond rates.
Okay.
That would be the reason. But on the second half, second quarter, I think that thing can change a little bit because we see that we waiting for the pivot momentum from the Fed, which they will cut rates. We will hear it maybe anytime soon on May, in the middle of May, where there is like FOMC meetings, and we like optimist to project that our projection like really convinced that they will cut rates maybe on maybe they will raise up one more time and on May, and maybe in June or July they will try to cut rates, and that would be the momentum where the big money or the big investor came into our country. And we will see our capital market projection. We project on the second quarter it would shoot up to 7,100, or it might be on 7,300 maximum. And the sector which will like push our capital market is financial sector, of course, and then the retail market also, and the property market that will like push our capital market stronger in the second quarter.
All right, great. Well, Daniel, Wiguna, thank you so much for being on the show. Thank you for sharing with us from Sukor Sekuritas.
Thank you.
I hope I see you again next week.
Yes.
All right.
Sure.
Well, with that, let's take a break, but we will bring you more stories and when we return with Paul, Caroline, and Archie. Stay right here on C Morning Show.